In the words of the great Ray Zelinsky from Tommy Boy, what the American public doesn't know is what makes them the American public. All right, this is Ryan with Real Estate Daily. Troy is out today, and I'm excited to let you know where the mainstream media is letting you down and what they are holding back that you do need to know to keep you from being the average Joe American public citizen out there. Let's get into some of these headlines right off the bat. Fannie Mae survey reports easing mortgage rates. So we bring this to you obviously every day, Monday through Friday, mortgage rates. So you kind of have seen the trajectory on where it goes. If you're not following us, make sure you go on and hit the subscribe button and the little notification bell so you get those notifications when we do bring you our daily episodes. So Fannie Mae survey is reporting easing mortgage rates. On top of it, they came out with their home purchase sentiment index, and it has actually increased 3.7 percentage points off the October low. Now, this is a survey of the general public and what they think of the overall housing market. It's their sentiment on the housing market, and it goes into a bunch of different components. Three of them that improved were home buying conditions, mortgage rate outlook, and job security, while a lot of others fell. What I found interesting is 21% of survey respondents believe it is a good time to buy a home, likely due to high mortgage rates and still high home prices. This number is up from 16% in November. And the actual respondents who believe it's a good time to sell decreased from 54 to 51% month over month. I think that those numbers going up, people are starting to realize that a lot of the mainstream headlines of, the market crashing, prices falling, number of deals falling, they're not getting the whole picture of what's out there, and we'll get into a little more detail of that here in a second. So I think that people are starting to wake up and realize that they did drop, and we have absolutely leveled out, and it is a good time to buy a home. Also on here, those that think that mortgage rates will go down in the next year increase from 10% to 14%, and those who expect rates to go up decrease from 51 to 62%. So those are all trajectories that we have heard a lot of economists, reverberate on, is that a majority of economists expect rates to go down next year. So anyways, I won't dwell too much on that. If you want this, go up and look up the Fannie Mae Home Purchase Sentiment Index, and you can break down all of the different components. I just thought it was interesting where the consumer's mindset is, because at the end of the day, that's a lot of what is driving the markets, is what consumers actually think, because then they're going to go on and act on it. So consumers are waking up or warming up to the idea of home purchases again. So as an overall national data set, obviously every market is different, and now it's even more important to drill down into your local market, talk to the professionals in your market, because I know in our local market, there is almost no inventory and demand is hot. And I'll get into a couple little scenarios here in a little bit, but we are absolutely seeing multiple offers on anything priced right now. So consumer confidence in housing finally rises thanks to falling home prices. This is from Troy's girlfriend, Diana Olick. I dumped her, he picked her up. So here she is. She's bringing us some of these great tidbits that I love. I think my favorite right here is more consumers now believe home prices will fall in the next 12 months. And more also said they believe mortgage rates will come down. Well, again, the American public does not know what they do not know. And how it works is normally when rates go up, prices go down. So I don't understand how prices are going to come down and rates are going to come down. I'm letting you know right now, if rates continue to go down, we will see prices to continue to go up because the demand is there. So one of these things has to be wrong here. Either prices will go up and rates will go down, or rates will go up and prices will go down, or they can just stay stagnant. Right now, that's what I'm seeing. I'm seeing, as rates have leveled off in this 6.25 range. So we're seeing most of our clients on a 30-year fix get from 5.99 to 6.5 in that range. once rates have kind of stabilized there, we have absolutely seen prices stabilize as well. So that's key. So that's why you want to be paying attention to mortgage rates. That's going to give you a good indication on where pricing trajectory is in your local market. And then home sales increase amid market cool down. First American came out and released their potential home sales model for November. End of the day, I don't want to get into these numbers too deep, other than we've got a decrease of 18.2% existing home sales, lower than that of last year. So it's a loss of 1.164 million sales. And the question you need to ask yourself, and this is a question that all of these journalists are not asking, is why are those numbers down? And the majority that are maybe even asking a little bit of that question, they're all coming to the same conclusion. It's because rates went up. And while that is true, it's also because rates were low for so long, there are just not many sellers. This number of sales would absolutely be higher if we had more inventory to sell. And actually I'm going to flip one of these. So this leads me into this whole Inland Empire home buying tumbles 45% as payments jump by 50 plus points. It didn't. All of that is true. Nowhere in here on these sales numbers that Jonathan Lasner did from the Orange County Register, nowhere on here or on his Orange County and LA home buying plummets 44% to record low. Nowhere on here, anywhere on this article, does he go over how many active homes are listed. We are bouncing off all-time lows on inventory. November and December saw a complete plummet on new listings. There is literally nothing to sell. The homes that are on the market, most of them are stale, they're dated, they need major remodels on a lot of them, and they're not priced to take into account that labor and cost that a buyer is going to have to invest in that home. So that's the number one thing that I don't see anybody covering. There are just not many listings, and it's because rates have been low for so long. You've got a lot of people, and it just doesn't make sense for them to sell, to move sideways, up, down, or all around. And a lot of them, they're just keeping them as rentals as they move into their next home. So if you're kind of interested in buying a home, how are other buyers out there accomplishing this, right? We do know rates have gone up. They've doubled, from January of last year to January this year. Where are people able to afford these homes? Biggest thing and biggest tool that buyers are employing right now are mortgage rate buydowns. I think that's followed very closely by adjustable rate mortgages. If you're out in the market, you need to price three things. You need to price a mortgage rate buydown, either a 2-1 buydown or a 3-2 buydown or a 3-2-1 buydown. You also need to price an adjustable rate mortgage through a credit union. They are the most cost-effective adjustable rate mortgages out there. A lot of them have a 5-year fixed period, some of them a 7-year fixed, and then they adjust every 6 months to 12 months after that. Not all credit unions are alike. I've seen stuff recently in the mid 4% range, and I've seen stuff in the 7% range for the exact same product. So you absolutely need to shop credit unions out there. And then some of the new hybrid products out there, like a 40-year mortgage, where the first 10 years you're only paying the interest. You're getting the tax write-off potentially on the interest, right? For those 10 years, the whole thought process is, worst case scenario, it will then convert into a 30-year mortgage. So if rates do not go down and you don't have a chance to refinance, you will go into a normal 30-year mortgage after that 10-year period, right? So you've got a very safe backstop. You have to qualify on that payment, the highest payment. So you have to be able to afford it in its worst section of that loan, right? At the end of it. And you're really betting on the fact that let me pay just a little bit of money, just the interest portion as we're going along, no principal. And my goal is to turn around and refinance as soon as rates get lower into a more traditional 30-year product, maybe a 15-year fixed rate mortgage. So mortgage rates buydowns are the hot new thing. Just want to go through what that means. If you're curious, please DM us. We'd love to give you more info. But basically, the sellers or home builders are normally going to give you a cash discount towards closing costs. That money will then buy down a lower rate. For example, a 2-1 buy down effectively sets your mortgage rate at 2 percentage points lower than your permanent rate. For the first year, 1 point lower in the second year, and then reverts to the permanent rate in rate 3. You're betting that in those first 2 years, you're probably gonna have a chance to refinance. A 3-2-1 buy down is very similar. It just adds another year into that. The first year is a 3% lower than 2% than 1%. The impact, you're gonna have a lower payment. And the beauty is, if you turn around and refinance, a majority of these payments that are paid down up front is actually held in an escrow account. And what really is happening is that loan servicer, let's say the rate at the time is 6%, you're only paying on 4% that first payment, right? For the first year. What's happening is that extra 2% interest rate you're not paying, it's getting drawn on by this holding account, this escrow account, right? And if you refinance while there's still money in it, most lenders allow you to use that money for that refinance. So it can either go towards paying down that loan balance at a refinance, or it can be used to refinance a loan. So you want to check with your lender. Not all buy downs are the same. And so you definitely need to ask them how that escrow account will be treated, because that is one of the key benefits of it. And again, some have better terms than others. So definitely check with that. And if you've got questions, please, again, reach out to us, DM us. If you know anybody in the market shopping and you think they could use this info, please share it with them right after you subscribe and hit the notifications on. And this is what we're looking at right now for our mortgage rates. You're at roughly a 6.366%. I think this was based on last Friday's, because Optimal Blues last business day. And again, I've seen some adjustable rate mortgages in the mid-4s still from a couple different credit unions. Important to shop. If you've got questions, please reach out to us. I know as I talk about inventory here, I've got a client, they've been on an auto search. We were writing full price offers on listings in December, and we hit a period where all of a sudden there were just no new listings. So there has not been a new listing in the area they're looking, and they're looking in a pretty big search for 2 weeks. So there's been no new listings that have met their qualifications in 2 weeks. We just had the first one go on the market yesterday. It was roughly $25,000 less than the last closed comp, which was in November. That home, that was a model match home, same street, had roughly the same upgrades. It sold for 1.125 in October, was on the market 2 weeks. It was originally listed at 1.18 and sold for $1,025,000. This listing is 1.1. We're offering $1,125,000. There are multiple offers on it. It's been on the market 2 days. We're up against 4 offers right now on that property. So that's something to give, kind of let you know where the market is. As rates stabilize, the market pricing is stabilized as well, but there is just not enough inventory. So we are seeing some multiple offer situations on the better properties. People aren't getting crazy, naming their firstborn child off that seller and things like that. But it is not what you might see if you're just looking at the headlines of home buying tumbles 45%. Believe me, it's not because of demand. It's because there is nothing out there to buy. Keep that in mind. Make sure when you're reading these articles, you're really getting deep and you're asking yourself the questions that these journalists are not asking. And don't be like Ray Zielinski says, and don't be that general American public. So thank you for joining us here on Real Estate Daily. I think Troy is going to be back tomorrow. If not, you're going to have to see my ugly mug one more time this week. But thank you for joining us. Peace and God bless.